What better way to start a day than have a great topic about insurance? So, but it's an issue that we all need to understand, and it affects our business. And I think what you're going to see now is some information for the next hour and a half about insurance you probably haven't seen before, because there's been a panel put together of people that are going to talk your language about insurance and how it affects you and your each business. So we've got a panel up here. So I want you to think about this as you've all been watching the debates, right? Okay, so this is kind of like I'm the moderator. So I could be Megyn Kelly, I guess, you know, somebody like that. This is the panel. Now they're not going to debate, they're going to just answer questions and give you ideas. So we've got a group of people here that we have Kathy Olson and Joe Colombo with Velo Insurance. Then we have Carlene Kicksmiller, sorry. I've only screwed that up 3 times since I've said that. But anyway, she's with James River Insurance. Then we have Joey Huckabee and Bob Dunn, which are insurance brokers. And then, of course, no meeting can be complete without an attorney, so we have Jeff Gilmore. So he's going to keep us in line. So we're going to start the presentation. The general plan is we're going to switch from speaker to speaker based on topics. If you have a question, we may allow 1 or 2 questions during that topic. If not, we'll hold them to the end, depending on how time goes. So, again, the purpose of this is to provide you with a forum to get more information and a better understanding of what's going on in the world of insurance and how it affects each business. So, with that, we'll start the presentation. And we want to give special thanks to our insurance people, and I've kind of talked about this already. This concept came up from Frank McGovern, and Frank was with Vela. Some of you may remember he and Bill Bradley were here for a number of years, and Frank was a guy that came up with some ideas. It was his idea to kind of put this program together in a form that I thought would be good for you to understand. Unfortunately, he passed away last year, but we want to keep him in mind and for bringing these ideas to us, and he was also committed to helping our industry grow as well. So we appreciate his efforts and want to remember him for that. So the situation, and those of you that have been around the EIFS industry for the last 20 years, insurance has become a big deal. And part of the insurance that we have to deal with, it really came to the forefront because of the water intrusion problems that happened back in the mid-90s. And those of you that were around, it started in Wilmington, North Carolina, actually in 1995. And from that point on, it caused a lot of issues with our industry. At that particular time, the EIFS industry was doing 30% of its business in the residential market. 30% was in the residential market. You would go into major towns such as Atlanta, Dallas, Houston. It was not uncommon to go in a subdivision and see over 50% of the houses were EIFS. Today, that's long gone. And the residential market, as far as EIFS goes, is only about 5% of the business or less. So it really impacted us. But not only did the insurance issue or the water intrusion issue impact what was going on in the residential market concerning EIFS, it also impacted what would happen in our commercial segment. It also drove the industry to make changes. And the drainage systems were an answer to some of the concerns and the issues that were raised during the water intrusion. Insurance companies got scared. They were paying out money. They didn't know what was going to happen to them. Insurance companies don't like to pay out money. They want you to pay them. They don't want to pay you, right? So when all these houses became issues, the insurance market went upside down. Exclusions came in, and at the end of the term, insurance was hard to get. It was very expensive if you could get it, and it became a concern to owners and general contractors and architects around the country. So for the past 20 years, we're still dealing with insurance, and it impacts our business. It's gotten much, much better of late, but we are in a situation now where it still has some impact. So for the next hour or so, we're going to talk about that. So at this point in time, I'd like for Joey and Joe and Carlene to kind of give us some updates and an overview of the market and the availability of EIFS coverage.
What we didn't discuss is who was going to actually talk first.
You want to start? Go ahead.
Okay. Oh, we did discuss it, and I forgot. It was last
That's
night.
okay. That was the page I skipped, see?
Okay. Well, EIFS coverage is available, but it's scarce. You might have 500 companies that will write a comprehensive general liability policy, and there's probably 6 or 7 that will write it without excluding EIFS coverage. So really, you're looking at a market of 7 or 8 carriers, and you're going to hear more about that a little bit later on. The big problem, of course, is the CGL policy and the exclusions that are put on the CGL policy to either exclude EIFS in its entirety or exclude certain either systems or certain things that the EIFS is tacked onto. Now, if you're a new contractor, it's even more difficult because you don't have a track record. And you're going to hear a little bit later about how to apply for EIFS coverage and all the information you need to apply. And quite frankly, if you're a new contractor who's doing EIFS for the first time, you don't have the track record that most companies would want to underwrite your risk. So it's even more difficult if you're new. If you're a contractor who've had EIFS claims in the past, it's difficult as well, but at least you then have an opportunity to explain what the claims were all about and how you might mitigate that in the future. But the bottom line is EIFS coverage is available, it's scarce. Scarce usually means it's expensive. Expensive is a relative term, but it is available.
I guess just to kind of further elaborate on that, there is, like Joe says, the coverage is available out there, and it does range anywhere from what we call full coverage, where you're covered for anything you do, but most of the marketplace is pretty limited. They are going to give you endorsements that are going to kind of tell you that you can do this, but you can't do that. Or you get the full exclusion that says, we just don't want to cover that exposure at all.
Joey?
Yeah, and so what both of them said is absolutely true. The availability is there. It is scarce. There are challenges that you have to overcome in applying for the coverage and working with an insurance broker to access the right insurance markets, and we'll address that, like you said, a little bit later. What I would like to tell you, though, is that in 10 years of talking about this topic in this group and different industry groups with regard to the EIFS insurance crisis, we've gone from having to pay $50,000 minimum premiums 10 years ago to where we've got carriers with $15,000 minimum premiums, and those are going down as we speak right now for general liability policies. So they are available. There's more access to insurance carriers and insurance capital to cover this than there has been since we started really talking about this 15 years ago. Some things you want to be aware of, though, is that there may be 12, 13 different insurance carriers that would be willing to write you a commercial general liability policy like Joe was talking about. But what you really have to focus on is what's in there, what's hidden in there, what different endorsements or exclusions are being used to limit the type of work that I can perform or the type of work that I can be covered to perform. And that's when it comes down to getting in touch with the right people to work on your behalf. That's the insurance broker, the wholesaler, that get to the right insurance carriers like the ones that are up here. So, and we're going to talk about that some more, but it is available. There's just more challenges for this group to be able to get access to it than your average contractor.
Okay, can everybody hear okay from the speakers? Okay, just want to make sure about that. Now, again, those of us been in these business a long time, you know that insurance has impacted our business, as I said a little while ago. And today, and I talked to some people, some people say insurance is a problem. I was at a convention last week and we were talking about insurance, and one of the guys I was talking to said, well, I don't have a problem with insurance. Well, there is a segment of our business that really insurance is probably not as critical as it used to be, but there is a segment of our business which we're still not able to get into because of insurance concerns. So if we want to grow the business, one of the things that we're going to have to do is to deal with the insurance issues. We've made a lot of progress, and we have, as an industry, have spent a lot of time with insurance people and trying to get them to understand that there are limitations in construction. There are concerns about EIFS, but we as an industry have dealt with those concerns, and we've answered the questions, and we have a proven track record that there is many jobs been done in the last 20 years that are performing very well. So insurance is still an issue we have to deal with because it's impacting our growth potential. So hopefully from now on, it's going to continue to get better as it has. I think what Joey just said about the fact that several years ago it would cost a contractor $50,000, now it's down to $15,000, that's a good thing. But those costs also affected everybody through the chain. So it affected the manufacturers, it affected the general contractor, it affected the architect, and it affected the owner. So when you add all those costs together, some guy's going to sit and look, is it really affordable to put EIFS on my job? And the answer may have come back as no. So we need to continue to knock down these barriers. So again, hopefully we're going to answer some of these questions. Now, the next part we'd like to talk about is the exclusions in commercial liability. So Joe and Carleen are going to kind of address that issue, if they would.
The main exclusion that everybody uses is what we call the ISO form. And just to give you a quick overview, ISO is Insurance Services Office. They're an organization that basically has standardized forms throughout the industry. You as a company belong to this organization, and this organization then sort of serves as a clearinghouse for rates and development of forms that kind of are standard across the industry. They employ the attorneys, the actuaries, and so on and so forth, so each insurance company doesn't have to. Well, about 2003, they came out with a form because most companies were using what we call manuscript endorsements. They were just slapping something on your policy that just says, this isn't covered. And by going to the ISO form, it standardized the language. It was something attorneys could work with. It was clear for brokers, to be able to present to you guys. There's still, though, is a lot of use of what we call manuscript language. And that's so that the companies can carve out, if you're doing residential and commercial work, perhaps they don't want residential, so they'll exclude the residential portion, but they'll give you the EIFS coverage to be able to continue to do your commercial jobs and be fully covered. So there's still a lot of mess out there, I guess is the best way to describe it.
You know how when you put your socks on in the morning, you never notice there's a hole in the sock until after you've put it on? Well, the CGL policy is your sock. It's going to keep your feet nice and warm. It's going to cover for things that happen, bodily injury or property damage to others, based on things that happen because of your premises or your products or your completed operations. The exclusion is the hole that, well, if you're like me, you put the sock on, you realize that's just a small hole, and you wear it anyway, and then you throw it away when you get home. But the exclusion is the hole in the sock that you need to be aware of. And there are many different types of exclusions, as Carleen said. But that's really where your insurance broker comes in to help explain those exclusions to you. And I know we're going to talk about that a little further as well.
Okay.
All right.
So the question now becomes is how do you remove those exclusions for EIFS? So Kathy, you want to address that?
Yes. The EIFS exclusion, the CGL policy can be removed if requested by the applicant and their insurance agent. However, as we've said, a lot of insurance carriers are reluctant to do that. When we underwrite, we're looking for certain things to include EIFS coverage, and that is if you can show that the applicators has strong skills to apply EIFS. They have certificates of training from the manufacturers, education, organizations they belong to, like EIMA, and how long they've been applying EIFS products, which systems they use are also important. I know at Vela we'll only write the drainable systems. And track record of successful performance on previous projects. We also base writing EIFS on past loss experience. If you have had losses related to EIFS, it certainly helps when applying for insurance to detail what those losses have been and what you've done to correct them, what loss control measures you've taken to possibly not have losses in the future. And there is additional premium charge for the EIFS coverage. I know that Vela Insurance, somebody had asked me yesterday what our minimum premium is, and Vela's minimum premium for an EIFS policy would be $15,000. In the wetter states, it would be $20,000.
I guess just to add to that a little bit, at James River, we don't have quite the same restrictions. We like to actually underwrite you, and how you do business and what your experience has been. And we do look at startups at James River, and we want to know then, do you know what you're doing? You know, you have no track record, so we want to look at your experience as an individual. If you're a startup organization, where have you been before? What have you done? What was your experience there? Our minimum premiums also start at $15,000. We don't have any differentiation depending on state. The only thing, there's a couple of states where we have some issues writing in. New York is one, although we will write EIFS contractors in the state of New York. Our minimum premium goes to $50,000 in New York just because of the action over issues up in New York. Beyond that, like Kathy said, it's just a matter of, provide us with as much detail as you possibly can. The more information that we have, the better decisions the underwriting people can make. Oftentimes we'll get applications in from agents, and this is where picking the right broker is so important because they're representing you to the marketplace. And so often we receive applications that have virtually no information on it. And we're supposed to make a decision based on being told that, okay, well, this is what this guy does. But it's only just like EIFS contractor. Well, give us more. Tell us what kind of work you're doing, where you're doing your work, and what your experience on that work has been.
Okay. So Carlene talked a little bit about the ISO and a little bit ago, but I think a little more discussion about the effort to continue to get them to drop some of the exclusions. So you and Kathy want to hit on that a little bit more?
It's because I said earlier, ISO is kind of an organization that was formed back in 1986, or actually prior to that, to help standardize the industry and give us some common language to work with. So getting ISO to drop something probably isn't going to happen because they're working at the behest of all their member companies. What we really have to kind of try to do is educate the industry about, so that at some point that endorsement just fades away and nobody uses it. I mean, it hasn't been amended since 2003. It's still the same form edition. So in the minds of the industry, that form still works. Nobody has challenged it to try to change it. So really it has to come from changing the perception within the insurance industry itself, and then ISO will respond accordingly.
So in our terminology, it'd be like changing a building code.
Kind of, yeah.
Yeah.
Actually, that's exactly right. That's a good analogy.
Dave?
How do you do that? I mean, we haven't had, probably as an industry, we probably haven't had a significant claim since 2003.
Well, here's one of the problems with the way ISO operates, or in the insurance industry operates. We use what we call class codes to identify who you are. And there is no separate class code within ISO's world for EIFS contractors. You're lumped in with guys that are doing masonry or stucco or something else like that. And I apologize, I've had laryngitis, and so my voice is just kind of back today, so if it's a little squeaky, hopefully it'll get better. But anyway, back to, it's, how do you do this? It's really kind of, I lost my train of thought, Joe.
Let me, I used an expression last night, and Dave wanted me to repeat it this morning, that one of the big features of an insurance company, and one of our big groups of employees is our actuaries. And what I said about actuaries last night is that they basically drive the car forward by looking in the rearview mirror. Unfortunately, that's how we underwrite, too. All we can base our underwriting on is past experience. There's very little way for us to project forward what's going to happen in the future. And because we're so focused on the past, every time we look at an application, every time we look at a coverage, we really need people like this association to keep us current with the changes. I guarantee you, if you had 40 underwriters in the room here and asked them when the last EIFS claim was, 2003 would not be the answer for 39 of them, maybe all 40 of them. And, you know, if that's the fact, we have a lot of insurance underwriters who need to know that. So I think the way to change it is for people like this association to get into our heads and tell us about all the things that are happening now, because all we focus on is what happened in the past.
Well, what I was going to say too, that, you know, relative to the class codes, they don't have any way to separate out the specific data to your industry because there is no specific code. And when the actuaries at ISO are working to develop rates and provide people with, because most of the insurance companies that are out there subscribe to ISO rating. And it's kind of goes back to the old, you know, garbage in, garbage out. And if they're not getting good information feeding in, probably one of the things that would help would be to move to using SIC codes or something like that if there's a specific code for what you guys do. And this industry is a dinosaur industry. It just takes things so long to change. People are reluctant to move away from what's been comfortable for the industry for a long time. And that kind of goes back to the building code analogy, you know, trying to get laws or codes changed sometimes just feels like you're trying to move a mountain. So it's just, it has to be, it's an education process.
I think what we're looking for is a little bit of a map. All bureaucracies are difficult, we deal with it with the building codes, but where do we start? You know, if we, as an organization, if we have a history of what our experience has been as an industry, we presented that, we just don't know who the right people are to present that to, who to talk to at ISO to say, hey, the way this is written, you know, based on this experience, here's a suggestion. But where do you start? And that's always been the dilemma, because it's always complicated, but knowing where to start at least opens another door and another door and another door. And I think we're willing to do that, but where do you start?
I think you start here with your association, and your association starts with companies like Bella and James River, where surplus lines companies. The companies that use ISO most are the standard market companies, and they're locked into ISO rates and ISO forms and whatnot. Excess and surplus lines companies, as we are, and a number of others that write the coverage, we're not locked into that. So we can change a lot quicker, we could be more flexible. And the only way the standard markets are going to change is after you've continued to have good experience and someone finally is going to wake up and say, you know what, we've been overcharging these people all these years based on their loss experience.
That when you give us money back?
I don't think there are any refunds,
Long
so.
spent.
No money
Back.
back. Yeah, we, as excess carriers, we just use ISO as a guide.
Right.
So really, trade organizations like EIMA just talking to insurance companies to get us to understand these problems haven't been happening for many years, showing more of a track record than what we have in our own database, because, our database is just limited to our specific company. So I think the easier route would be to go through trade organizations and have them educate the insurance companies more on the updated EIFS product and how it's being installed today.
So, Bill, you have a question?
In 2003, the technical committee met with ISO in New Jersey. And the problem at that time was not water intrusion. The problem was combustibility of the systems. And they have classifications for slow burn, combustible, non-combustible, et cetera. And we, as a company, have actually been required to provide letters for indicating that meeting that actually took place, where they classified EIFS as slow burn. And I've heard recently that that slow burn has been changed to to combustible. Is that in fact true? Does anybody know that? And you talk about classes. I'm not sure what the classes are that you're actually referring to.
If you don't mind, I mean, I think
Jumping
I think I can
in.
help you here. Okay, so what you're talking about is the property insurance for the actual building where the cladding is
I
EIFS.
realize you're
Sure,
talking
no,
about
absolutely. It's a very good question.
Contractors,
Yeah.
but we as a manufacturer have to provide data.
Absolutely.
To indicate that the
And
insurance.
to my knowledge, and I write a tremendous amount of property that is cladded with EIFS, on the coast, inland, everywhere in between. It really comes down to what the building material is, whether it's wood frame, whether it's masonry, whether it's steel. That's where you're going to get your classification. Now, as far as the slow burn part of it, what I can tell you is not one time have we had an EIFS condominium association or an EIFS office building, EIFS medical building, have any problem whatsoever with getting the property insurance and getting the best rate for it based on that substrate, not so much having to do with the EIFS cladding. So I think maybe in some other parts of the country, it could be more of a problem. The one issue you do see for the property insurance, to fully answer your question, is if you get right up against the ocean, there are some property insurance concerns about that being wind shear, basically. And that comes down, that's not so much ISO or anybody standardized, that's individual underwriting companies. And what ends up happening is somebody had a bad experience and they just think, well, this is what's going to happen over and over again. So you just have to search for the right underwriting company that is going to look at it more prudently. I hope that answers.
Okay, that's good.
Is the overall objective to get EIFS its own class code?
That would be the ideal, because then your data can be separated from everybody else's. And once you can isolate that data, then you can look back historically, because that's Joe's comment about actuaries, driving forward by looking in the rearview mirror is very, very true. They're working on data that's historical to project what they think is going to happen in the future. So if your data is isolated and we can develop rates or at least guidelines around that data, that would be huge, because then you're separated from all the other contractors that are, you're getting a black eye for things that maybe have nothing to do with what you do.
Does stucco have its own class code?
Yes,
That's where you fall.
you fall into the stucco class code most of the time.
So that means all the water intrusion problems with stucco affect the classification of EIFS.
That's correct.
I would venture to say that most underwriters consider stucco and EIFS one and the same.
Exactly.
Well, that's a problem.
Yeah.
I mean, it's a problem because one of the things that we've had to deal with is that they classify them as the same thing, but they're not the same thing.
They're not, no.
Yeah, and that's where it's our job and it's their job to understand there's a tremendous difference. So if you were to look at the insurance companies up here, if you were to actually look at how they break it out or look at the case study you'll see later, you'll see that we're looking at a synthetic stucco classification or rate, and we're looking at stucco, we're looking at masonry. In the world that they discussed, excess and surplus lines markets or insurance companies versus standard insurance companies like your Hartford, your State Farms, your Travelers you hear about, they have the flexibility when she mentioned manuscripted endorsement, well, you can also manuscript the idea that, okay, I'm going to charge you one rate for your EIFS work, I'm going to charge you another rate for your hard coat stucco work, and maybe another rate for any other trades you might do. Now, that's the flexibility of the marketplace that's being represented up here. So when they talk about the ISO exclusion, that ISO exclusion is being used by those standard insurance companies. So, you know, asking ISO to remove the exclusion, they don't choose to put the exclusion there. The insurance companies that subscribe to ISO choose to use that. What we're looking for is to open up as many companies as possible that will not even want to use that form. They're going to use their own form or no form at all to restrict EIFS coverage. That's the ideal situation, and we're headed there.
Okay, one more question, then we have to move on. So, Wayne?
I'm not sure I understand the comment of the stucco versus EIFS and being lumped together, because almost every single time EIFS is excluded, they allow stucco.
Yeah.
So, and we all know stucco has water intrusion issues. Why does the insurance industry look favorably on stucco as opposed to EIFS?
Well, stucco is not, doesn't keep water out. It's what you put on top of the stucco that keeps the water out. Stucco it absorbs water.
Of course, yeah.
But the insurance company seems to look favorably on.
Well, but I wasn't saying that they look more favorably on stucco and EIFS. I'm saying that they consider them one and the same.
Well, in my experience though, I mean, EIFS gets excluded, but they'll allow us to put stucco on.
You're correct. And
You're
if
correct,
you went to
yeah.
a standard insurance policy, okay, it's going to have a total EIFS exclusion. And if you say, all I do is hard coat stucco, most people are going to interpret that as saying, well, you'll be covered for your hard coat work, but if you do any synthetic stucco or EIFS work, it's going to be totally excluded. Now, that's an interpretation, and it's not necessarily right. Like she was telling you, the exclusion from ISO is so old and so outdated, and your systems have been re-engineered probably 7 or 8 times since that was written. The problem is, it could very well exclude hard coat stucco just like it excludes, because it's so comprehensively written. So some of that's an interpretation that's a little dangerous for people to think, well, I only do hard coat so I can handle a total EIFS exclusion. Well, if they've never read the total EIFS exclusion, they realize there's a tremendous amount of it that refers to components that are part of the hard coat process as well. So some of that's a misconception.
Okay, we'll have some time for more discussion at the end, but if we can move forward. So I think to summarize a point that was made, Dave asked the question about who do we go after? Who do we talk to if the ISOs? And so the recommendation really is to go one-on-one to the underwriters is what.
In some ways, yes. I mean, you know, if you want the flexibility, changing the standard lines companies is going to be very difficult. And the only time that they're going to start making exceptions is if there's a lot of premium there.
Okay.
But maybe approaching an organization like NAPSLO or something like that, you know, works with companies like us.
Okay. All right.
What is NAPSLO?
National Association of Surplus Lines Offices.
What was that again?
National Association of Surplus Lines Offices.
Okay, the next topic we have is a list of EIFS insurance markets. So Kathy, you want to share that with us? Do we have a slide on that, Dave? Okay.
Insurance markets that we know of that currently have EIFS coverage available are Vela Insurance, which Joe and I represent, James River, which Carlene represents, and that's all you need to know. No, just Paragon Insurance, Navigators, Evanston, First Mercury, First Specialty, Everest National, and Maxim. And these are all surplus lines companies. They're not standard insurance companies.
Right.
I have also brought a few of our marketing brochures on EIFS that are on the counter over to your right, if you care to look at them, kind of explaining what we cover and what we're looking for as far as applications go.
And all this information is also available on the EIMA website. So if you want to go to that, you can look there for that source as well. So I guess the next question is to turn it over to Joey and Joe. Is how do we change the paradigm of this?
Give them the insurance company perspective first, Joe.
Sure.
Thank you.
Well, again, you have to understand how the insurance application process works. It starts with you, the insurer, the contractor, filling out an application. It goes to the retail agent, which would be someone like Joey, or Joey. If he decides in his experience that it's a risk that a standard market would write, he goes directly to the standard market to try and place your insurance. If he decides it's not a standard market type risk, he then has to go to an excess and surplus lines broker, a broker's broker, a wholesaler is what we refer to them, who then can go to companies like James River or Bella or the other ones that are on the list there. And it all starts with the application from you, the broker deciding or trying to make a determination as to whether it's a standard market risk or a surplus lines risk, and then getting it to the right company. All right? Once it gets to the company, then it's really the quality of the application that's going to change the paradigm on a risk-by-risk basis. The more information, the better. If you've got certifications, we need to know about them. If you've had losses, we need detail on the losses, and specifically what's going to happen to prevent the loss from happening again. What have you changed? What did you learn? The more, when you think of an application, everybody thinks, well, Geico, in 15 minutes we could save you 15% of your car insurance policy. Yeah. Well, cars are all pretty similar, although there's a million different varieties of them. They all basically work the same way. The way you folks work and what you do is completely different, and your experience in what you do is completely different. And if you look at the application as your opportunity to educate the underwriter on what you do and how you do it, that's a much better approach and will get you not only better coverage, but coverage perhaps less expensively as well. Because there's really two determinations that the underwriters make. A, do I want to write this risk? And B, how do I price it so we have a reasonable chance of making money? So it starts with the complete application and getting that application to the right market.
I hope you don't mind if I interject
By
just
all
something
means.
that's a
Please do,
little
yeah.
bit. This is something that, at the association level too, you asked earlier, what can we do to change? And some of the things from state to state, there's legislative issues that the insurance companies have to deal with. And so that's something as a body, you might be able to lobby to get some changes legislatively. The statutes are proposed, which I know Jeff is going to talk about later. Or developing anti-indemnity statutes. I mean, one of the things that unfortunately a lot of subcontractors, which you guys are probably most of the time to a general, you're looped into these situations contractually. So changing the paradigm sometimes involves also, actively trying to get some of the laws and make things a little bit more business-friendly as opposed to completely consumer-friendly, so that you guys can continue to operate your business in a professional manner without being sort of caught up in these legislative issues.
That's a very good point. So let's talk just briefly about some of the mistakes that are made sort of when the rubber meets the road, when you go and when an applicator or customer of yours goes and is searching for coverage. So the first thing would be, we're going to tell you that broker selection is very important, okay? The biggest mistakes that I see made when I receive phone calls, whether it be because someone's found something from the EIMA website or has been referred to us for some way because we've been doing this for 15 years with the class of business. But here's the common things that I see that hinder that contractor's ability. And these are easy things. One of the biggest, very little time. They've bid the job. They've worked with the manufacturer's rep possibly to spec the right material. They've done everything. Not made any phone call about what are the insurance requirements on the job. Are you going to require me to have coverage for applying EIFS? And if so, how much in limits do you want me to have? These are things that need to take place in the estimating and bidding process. And at that point, you need to be discussing with your insurance broker, if you have one that does understand this marketplace and traverses it well, or you need to be looking for one that does. I'm not saying you have to choose me, I'm not saying you have to choose him, but you need to find somebody that your peers tell you, hey, this insurance broker or this organization knows what they're doing. They work with the class of business on a regular basis. And what that means is we understand the questions that the insurance carriers want to have answered for them. We understand the issues that may be of a concern with regard to state. Do you do your work in Georgia, South Carolina, North Carolina, Florida? How much is your mix in each one? How much is your mix of work across different trades? These are all things we want to find out. The problem is you get a phone call and says, you know, we just bid this job and they want to give us the job. They say we have to have the coverage. That's a very challenging situation. You're almost never going to get the right result there because you're trying to do it too quickly. So some of that is upfront, trying to determine, is there going to be an insurance requirement here? Do I need to address this? Do I have coverage for EIFS right now in my current insurance program? If I don't, who do I need to contact? And I suggest talking to your peers, talking to your manufacturers, representatives, talking to the distributors, and talking to your association that you pay to be a part of. Another thing that we see that can really hinder this is there's an apprehension from the applicator, contractor, insured, however you want to refer to it, to leave the comfort level they have maybe in their local town. Maybe they've had an insurance agent in the town who's handled their insurance for 10 or 15 years. This is the one applicator that they work with. They're good friends. It works well. Now you need EIFS coverage, okay? So you got to ask that person who does not work in that marketplace hardly at all and is going to try to do it once on your behalf. That creates a lot of problems because unless you're talking about the manuscripted endorsements, unless you're speaking with these carriers and the wholesalers that communicate with them on a regular basis, then you're going to miss things. And you're not going to be able to tell the client or the applicator, hey, this is something that may not work for you based on the contract requirements for the particular job. So what ends up happening is the applicator buys a very expensive insurance policy that does not meet the requirements of the job that they bought it for, and everybody's upset. That we see that a lot. The last thing I would tell you is the biggest mistake that I see made has nothing to do with the applicator or the insured. It has nothing to do with the insurance company. It has to do with retail insurance brokers and the wholesalers that are charged with working with these insurance carriers. And here's what I'm talking about. If you call an insurance broker or a wholesaler and say, can you help me with EIFS coverage or to write an EIFS application, and say, oh yeah, I know somebody who will do that. Well, the follow-up question should be, how many times have you done this in the past couple of years? How often do you do it? Are you familiar with their manuscripted forms? Because they're all written differently. Do you do full contract reviews to make sure that, hey, are we meeting the requirements of the contract? You may be awarded a contract that requires $15 million in limits. You want to address that well in advance of making that bid. So that's a common mistake we see made is insurance brokers will take the phone call and out of greed will go to a marketplace with very little knowledge of what's going on. They just know that they think they can find a fit for you. That's a big problem, and that's a problem at our level where we should raise our hands and say, hey, I'm not very experienced in this. You know, a good example would be if a big trucking company were to contact me tomorrow, I'm going to send them to a trucking insurance broker because that's not my expertise at all. I think too many people try to work with the class of business that has some specific needs, and they don't understand the specific needs or how to get it done best. So broker selection is pretty important there.
Some briefcases ringing.
Sure it is. The last thing about that would be you definitely want a broker and a wholesaler who understand if you're not hearing these questions, then it's really not helping you. If they're not asking you about, let me review the contract for the jobs that you've done, the jobs that you're planning on doing, let me review your workforce model. Are you using subcontractors? Are you using your own workforce? Are you using some combination? Because these policies will have restrictive language unless it's addressed with regard to the workforce, subcontractor requirements, that sort of thing. So those are some of the challenges that we think have nothing to do with the applicator or their workmanship, have more to do with the communication breakdown that takes place between the applicator, the insurance broker, and eventually the insurance carrier. So I hope that helps some.
I think Joey brings up a very good point in this whole effort to change the paradigm is the development of expertise, finding those people that fully understand your business and maybe at the association level, finding those particular insurance brokers that understand what you do, and to some extent consolidating the business in that manner so that they can come to a wholesaler who's knowledgeable about your industry, who then comes to the carriers that are very knowledgeable about your industry. Because once you kind of develop a sort of a channel to to solve the problem, then the rest of the industry starts looking at it like, oh, what are they doing? And they're doing it really well. And it starts to open the door that way. So that's sort of one thing to maybe consider at the association level.
Yeah, I think that's a great point, and it's something that we did learn through this process is you've got to go to brokers that understand what the needs are. So, okay, so let's get some legal opinions here. So we want Jeff to kind of address the OSIPs and CSIPs and give you some more things that you may not understand, and he'll clear them up for you.
Or we'll try. Thank you. Well, I'm going to try to back up to about 20,000 feet a little bit. We've been talking from obviously some active participants who know a lot about this industry. I want to talk about how some of the paradigm shifts that try to deal with coverage challenges from a project-wide perspective. You'll see on the screen OSIPs and CSIPs. Not the kind of sipping anybody really wants to do for the rest of today, but we'll run with it. One of the real goals with OSIPs, and first of all, who has been involved in a project with an OSIP or CSIP program? Okay, so I see a handful of people, so there's some familiarity. The objective is to provide coverage for the entire project team, to avoid gaps, to avoid a patchwork approach that comes with the conventional approach where the prime obviously has its GL policy. They get indemnity commitments from the subcontractors. Each sub, each supplier, et cetera, have their own unique insurance obligations as well. And to take that and put it into a comprehensive coverage approach. And one of the economic benefits of that, of course, is to enhance the buying power in theory, and also to avoid some of the additional layers of markup that come if everybody goes out and procures their own insurance. So the solution, obviously, is, and that's the next slide, Dave. Sorry, as he was taking a picture there. Is obviously these controlled insurance programs. You also hear the language, a wrap-up. They're essentially synonymous. And there are a couple of different approaches to these controlled insurance programs. One is project-specific, so it tends to be larger projects that ultimately benefit or can support one of these programs. There are also specific programs that some of the large GCs will use involving rolling wraps, which covers not just one project, but it will cover the portfolio of work that a large GC may be doing on a broader basis. But then the controlled insurance programs themselves break down to, again, the OSIP, obviously indicating that the owner is controlling that program, or the CSIP. And the contractor programs can obviously be obtained by the conventional general contractor, a design builder, a CM. So there are there are a number of different approaches to the solution. So looking at what are you ultimately getting as part of? I'm just going to refer generally to OSIP, but referring to all of these. Typically, the kinds of coverages that are part of that package, and you can see on the slide, involve workers' comp, general liabilities, builder's risk, maybe pollution, maybe an excess or umbrella policy that applies. And again, that package can vary depending upon the approach that the buyer of that coverage decides to include. Often not included, automobile liability, contractors' equipment, and one key coverage that often is not part of an OSIP is professional liability, whether that involves design services that perhaps a design builder is providing, or even the design services that may be shifted down to a particular trade contractor who has certain design-related responsibilities for a particular system. So you have to look carefully at the kinds of services a particular project needs. And conceivably, that kind of coverage can be brought to an OSIP, but it's not generally what we see as part of the normal package. And then, of course, one of the other areas that, one of the first OSIP programs I was asked to look at, and it was for a large multifamily apartment project in New England. And it was going to be an EIFS-clad project. I was pretty excited about it, given my role with this organization. And of course, I drilled down, the first thing I saw was the EIFS exclusion as part of the OSIP. There was obviously a disconnect. It was a problem we could solve, but obviously those exclusions have to be evaluated in designing an OSIP program. One of the other areas that can be unique with an OSIP or CSIP has to do with the administration of the program. There has to be a sponsor, whether it's the owner or contractor. Sometimes that administration is handled by a broker. Sometimes with large organizations, they have a risk management capability that can administer the CSIP. But all of it is laid out in a more comprehensive part of the project manual, specifications, addendum. I mean, there are different approaches I see taken to it. And obviously, at the bid phase, the potential participants in the project, the subcontractors, have to understand how that's going to affect their administration of this particular contract, their coverage, what they have to do. I mean, one of the basics with a CSIP, you may see that as part of the bid package, but in order to ultimately benefit from it, you have to enroll. And I've seen litigation where there was a CSIP on a project, but the subcontractor, I guess out of old habits, didn't realize that there were additional steps that had to be taken. And in the project manual, there were detailed requirements concerning how you enroll in the program. So all of that makes it a little bit different from the traditional approach. The controlled insurance program will have a claims services feature. Also, there'll be language dealing with, there'll be perhaps different approaches to indemnity provisions, waiver of subrogation, how deductibles are handled. In an OSIP, traditionally, the owner is going to cover the deductible, but obviously there's some variations on that theme. So let me address some of the pros and cons of this approach. The main advantage, of course, as I already mentioned, has to do with the economies of scale. Ultimately, you're buying the insurance that's needed for this unique project. It's cheaper. It's bundled. Also, there are potentially efficiencies in the administration. And as I alluded to earlier, avoiding additional markups. And this is just some of the potential benefits. Another is expanding the pool of potential participants in the project. There may be subcontractors, applicators who may not have access to the kind of coverage that's necessary given the unique needs of a particular project. The buying power of that OSIP or CSIP is such that you're going to broaden the pool of potential bidders and people who can be involved in the project. Another issue, in particular on public projects where there are various socioeconomic goals, whether it's disadvantaged business enterprises, minority business enterprises, et cetera. Again, you're able to reach down into a pool of potential participants who may or may not be able to get the coverage that's needed for a project. And obviously with an OSIP or CSIP, they're going to be under that tent. And so that's an advantage. Ultimately, though, the real key is having an insurance program that's tailored to the unique project. So I want to, I guess, some of the cons. The sponsor really has to be prepared to deal with the administrative challenges, and certainly that's incumbent upon the owner or contractor who's going to sponsor the program. There are some challenges in some jurisdictions with restrictive laws, particularly when it comes to workers' comp coverage. Some jurisdictions, those are state-sponsored workers' comp programs, and so you're not going to be able to have an OSIP or CSIP that necessarily deals with that part of the coverage. There's also a question often if there is off-site coverage. If there is fabrication or other activity to support the project that's done off-site, is that included with the CIP coverage? The other issue has to do with this exclusion for design-related services. I mentioned that again because, again, it's often overlooked. And finally, the issues that come up having to do with the extended statute of limitations or statutes of repose. Is there a need for tail coverage? And again, with the typical OSIP, the coverage may end with a project completion and not provide the kind of completed operations coverage that may be called for or necessary, depending upon either the contract requirements or the unique laws of the jurisdiction where you're doing business. So a few additional considerations. Again, this is a little bit redundant, but the things to think about. Obviously, the big takeaway here is, this should be a program that's tailored to the project. And if it's an EIFS project, it's going to be coverage that addresses the unique needs of an EIFS project. One thing that I'm also often concerned about is whether the defense costs erode the policy limits. Again, this is not necessarily an OSIP or CSIP unique concern, but it's something I think you always have to look at for purposes of the adequacy of your coverage. Obviously the takeaway here is supplemental coverage may be necessary beyond the OSIP or CSIP, particularly dealing with the post-completion issue. Again, it's different state by state, but in many jurisdictions throughout this country, the statute of repose can provide exposure for up to 10 years. And you obviously have to look at how am I managing that risk, and is this OSIP or CSIP program going to cover that risk, and it may not. So, each contractor, each subcontractor has to look at their position and understand whether they're going to need their own supplemental coverage. Another issue has to do with the question of whether your own GL coverage has an exclusion if you're working on an OSIP or CSIP project. And that's something that you have to take into account and make sure that that does not become a problem. Ultimately, the bottom line is you've got to know your broker, you've got to know your agent, you've got to consult with an insurance advisor, and as you're hearing from this panel, people who are familiar with the needs of this industry.
Thank you, Jeff. Do you want to say something?
Yeah, I just wanted to add the fact that virtually all contractor policies beyond EIFS contractor policies exclude RAPs, OSIPs, CSIPs, that sort of thing. And it's very difficult to get that endorsement removed because carriers don't want to get involved in separate insurance programs that are set up for specific projects. And Jeff raised a very important point that oftentimes the work you do outside of that, if you are involved in RAPs, may not be covered under your insurance policy without an endorsement to amend it to allow you to do work off premises. And there's very few carriers out there that will give you that exception. There's a limited number of carriers that write RAPs. There's a limited number of carriers that will give you exceptions to do your work off premises, take the stuff to the job, and have it become a part of the RAP.
You're saying that if it's not covered in the CSIP, you need to make sure your carrier does cover you for on-site?
Yep.
Yes.
Yeah, absolutely. So what you would do is you take the enrollment package for any CSIP, OSIP wrap-up. You want to have an insurance broker who's going to be willing to review that for you. They're not going to tell you, because the administrator for the OSIP, CSIP, and wrap-ups are going to tell you, hey, this is easy, you just complete it, send us the deck page, you're good to go. That's not the case. So you'll need to have an insurance broker who's willing to look at it for you. Possibly your insurance carrier would need to get involved and be willing to at least have a discussion like she's talking about, because what happens is if the project's going to charge you premium for it and the owner or contractor is going to say, you got to enroll in this, we're going to charge you a premium for it in the form of a change order or however they're going to handle the mechanics of that, and we're going to provide you $25 million in limits, okay? Well, if those limits get completely eroded for any of the number of reasons he kind of showed you on the con slide there, your insurance carrier honestly has no business having to step in and pay for that claim, because guess what? The project took the premium from you for it, not your insurance carrier. So these programs, I don't mean to make a bad joke, but they are very good on paper. They sound great conceptually. But when the rubber meets the road, you got to have someone that's going to either consult with you to show you there's some trappings here. And if you're talking about the policies that we're discussing here today that are specific for EIFS coverage, there's some contractors in the room who work with me that can tell you, you've got to add money into your bid. The program will not work for you. If you've been in them before, you know what I'm talking about, because the umbrella needs, the way that our premiums are developed for these specialized policies are not standardized like the other sub-trades that might be enrolling in these programs. So it's not something you can't do. It's not something you want to walk away from for the business, but you just want to make sure you're working with someone who can consult you and tell you how much more to add or what you need to address up front.
They're getting better, but they used to actually tell us if we would get a rebate from our
Sure.
insurance company. And that never occurred.
That never
Yeah,
happens.
in a perfect world, that's supposed to work.
You keep wanting that rebate back, don't you? And you're not getting it.
No, but that's important.
Listen, we've gone through a lot already. We're going to take a real quick break here, and then we're going to come back. We'll talk about some of the obstacles and how to remove those, how to do some of this bundling that you heard about, and then we've got a case study that we're going to kind of give you an idea of how that process works. So let's take about a 10-minute break and then come right back in here. Thanks. So, again, the next section, we're going to talk about some of the nuts and bolts of dealing with the concerns, some of the objectives, the obstacles that you're going to run into with that. So the next part is the really obstacles of obtaining the EIFS coverage. So we're going to let Joe and Joey kind of lead us off with that.
Okay. It's a little bit redundant because we talked about this earlier. But again, the biggest obstacle is letting, either through your association or through your own brokers or whatever, letting the insurance market know exactly what you're doing, how your industry has changed, how your risk has evolved, getting past those preconceived notions and outdated notions of what EIFS is and is not. That's really the biggest thing. You know, and again, getting an accurate application, getting it to the right market. It's what's that term? It isn't rocket science, and it really isn't.
Joey?
Yeah, and I'll be pretty short here because this is a bit redundant in what we've already talked about, so no reason to beat it to death. There will be a slide at some point, and I'll have hard copies here for you as well. You can use them however you see fit, but we've, over 15 years, have developed what we think is as much as we can squeeze into about a 3.5-page questionnaire that gives every piece of information that the underwriting companies have asked us over the years or that have been issues in the past. So that'll be available to anybody. And there's a slide here. You can't see it very well, but I've got hard copies. If everybody wants one to take, by all means, you can get one. So it's the application process. It's, really being comfortable selecting the proper broker and checking their credentials. You don't just call them and listen to them give you a sales pitch. Check behind them. Check with your peers. Check with your manufacturers, reps that you trust that have been out there in that marketplace. Check with your associations and see who you really trust. Once you do, one of the other things to do is get that broker or that organization to give you their game plan, okay? What are they gonna do to review your contracts? What is their service standard gonna be as far as reviewing your certificate requirements? Because there are unique challenges that come with dealing with the types of insurance policies we've been discussing the whole first section that are manuscripted endorsements, surplus lines, insurance companies, and that is the marketplace for insurance for the synthetic stucco applicator. And I would like to say this too about when we talk about challenges and obstacles is these carriers have really stepped up to the plate for the industry. That list you saw, that some of those people come and go. But the folks that are here today from the insurance carriers, they have dedicated themselves to coming to the association and learning more about how good your process is and how good your product is because they want to offer it to you at the best possible cost. So finding the way to take your time to explain your business, open up the guts a little bit of your business. Sometimes it involves talking about the financials of the business, how you handle your workforce, those sorts of things. They're critical and important in being able to explain to the underwriting company why you as a contractor or your contractor customers out there should get the coverage and should get it at the best possible cost. So that's really the key to it, is the communication part of it. And proper broker selection, who work with the proper MGAs and wholesalers to access the right insurance carriers who have come and listened to your needs. That's the most important thing I can tell you.
Okay?
I think to add on real quick, just to what Joey said and earlier what Jeff said, it's very important you look at the contracts or you look at the requirements of the jobs you're bidding. Understand what you're getting yourself into before you even start working with your insurance broker or get somebody to help at your insurance broker's office. Make sure that your contracts, oftentimes they're not in your favor. They're in the favor of the person that wants you, to bid the job. So just make sure that you understand what's required going into the process.
Okay. So let's, we'll get a little bit deeper into it now with the application process and how to obtain it and get the best and reasonable cost. So Kathy, you want to lead us off with that one?
Sure. I have a slide. Again, the more details we can get with our submissions, the better we can underwrite and provide coverage for you. In addition to a completed application and contractor supplement, certificates of training that are issued by EIFS manufacturers, kind of just to show us that you're educated and know how to apply the product. Continued education such as EIFS Doing It Right, participation in organizations like EIMA, organization best practices, applications and questionnaires fully completed. Again, you're getting a experienced and good broker will help in this area. And then safety written procedures, if you've done any loss control procedures. History of your insurance coverage, we usually need 5 years of loss data valued within 90 days, and explaining any claim occurrences that you've had and any actions you've taken to mitigate further losses. Getting copies of the subcontractor agreements to make sure that proper risk transfer is taking place, and any inspection reports that you may have. With regards to subcontractors, the questionnaires usually ask these questions, but we need to know if you get certificates from your subs, if you have hold harmless agreements with them, and if they name you as additional insured. So again, the more detail you can give us about your organization, the better we can underwrite the account and give you the best possible price.
If you guys use subcontractors at all within your own organization, include a copy of your standard agreement and make sure that agreement has been reviewed by an attorney and that your insurance broker understands that agreement as well. Because we do review all the contracts that we receive.
Joey?
Yeah, so from an insurance broker's perspective, in today's environment, these things are most of these items, your standard subcontractor agreement that you could execute very easily. The quality control efforts they refer to up there with regard to inspection reports. Some other things that don't come in as much to the general liability but do help accentuate the quality of the company would be safety manuals showing how you perform from a safety standpoint on a job. So quality control, safety, everything that we can show. You're looking for an insurance broker or an insurance organization that's going to provide you a lot of these things. Okay, now you can work with your local attorneys to develop subcontractor agreements, but organizations like mine will give you 3 different forms that have already been approved by attorneys that you can start using right away. What we do that for is so when we're looking to fill in these gaps to make you the most attractive application possible to the insurance carrier, let's say you've got 8 out of 10 of these items where you're like, Joey, we've been doing safety forever. We do toolbox talks. So we just need something formalized. Well, instead of you having to go pay for it or write it yourself, the insurance broker at this point should be able to provide you some of those solutions, like a standardized safety manual for a wall contractor like yourself. So we could turn around and you could choose which pieces of that you want to use, and then we submit that to the insurance carrier, and it shows them the quality of the contractor that they're dealing with. And I want a little bit about the subcontractor, because I know that's a big piece to the workforce in the wall trade. Just from working in it for 15 years, we have clients that use subcontractors that are true subcontractors that run their own businesses and carry their own insurance and have their own buy their own materials and just have to meet the requirements of having the job performed for your contract in the duration that's required. The one that we're more familiar with is a 1099 labor force. Okay, so if you have a labor force that's working for you all the time, that maybe they're buying their own workers' compensation, but they're going to the job when you say to go to the job, they're performing the work you say to perform every day, they're using materials that you've purchased, that's really not a subcontractor so much from an insurance standpoint as it is more of a 1099 employee. Now that, forget the tax implication or anything like that, but from an insurance standpoint, you want to have this dialogue because the policies that are out there will have language that addresses subcontractors. Those policies don't define subcontractors. So at that point, you need to go to where do you find a definition for a subcontractor? Well, there's an IRS definition and there's a common law definition. I think Department of Labor has one as well. So that's what's going to determine whether a subcontractor becomes an insurance issue for you or not. So you want to have that dialogue about, well, this is how my workforce is set up, so that the insurance broker can properly communicate to the underwriting company, yes, we use these 3 subcontractors, we use them all the time, we've been using them for 8 years, and here's our experience and here's their experience. That makes it much more attractive to them than to say, hey, we sub out 70% of our labor, because that's what the application will say unless you go the step further and have that dialogue. So something to consider that we see, these are some things we see that get held up sometimes in making an application look as best it possibly can. And it really just comes down to explaining it better. The communication between the applicator and the broker, and then the broker and the wholesaler and the carrier.
Okay. All right, so I guess with that, we'll go down and talk about bundling your insurance. So I think we've covered most of the application side of it. So
Earlier, I think I said that the Geico Gecko couldn't help you. During this part of the program, I'm going to tell you that Flo from Progressive and Jake from State Farm can't help you either. And he does sound hideous.
What kitties do.
And I really don't have, from our standpoint, we write specialist-type coverage. So, we don't write your auto, we wouldn't write your comp, your property. We don't write any of that stuff, so bundling is really irrelevant for us. But when you start dealing with your insurance broker, and then obviously I'm going to turn it over to Joey now, that's when there may be some benefit.
And I probably did David disservice here. The term bundling is something that's kind of being thrown out there in the insurance world. What we're talking about here is not so much, or it's not really the bundling at all, as it is working with an insurance broker or an insurance organization for your entire insurance program. And what I mean by that is, instead of just going out and looking for someone who might not be in your town or might not be in your state to help you meet the needs you have for EIFS-specific liability insurance coverage, the problem with that model is, okay, you're going to go to a broker and ask them to provide you a general liability policy and possibly an umbrella policy that would include coverage for EIFS to satisfy your work. That's all well and good. You're going to have a contract review that we keep talking about, where you want to review all the contracts you're entering into. Well, if you're all familiar with those insurance requirements are not just for liability. They're for automobile liability. They're for sometimes the builder's risk. They're almost always going to address your workers' compensation. You want to be able to choose one organization that you can trust that will run or manage your entire insurance program. It is not I'm just going to be honest with you. It's not nearly as attractive to someone in one of our positions to have a phone call from 3 states away that says, hey, I want a general liability policy because I've got this job to do. We'll try to help, because especially if they come through the association, we feel an obligation to try to help them. What is much more attractive, and really the only business model that my organization works with, is we come out and work with you on all of your insurance needs that are required in that construction contract. There are continuity issues that can cause problems, so to speak. So if you've got to have a $5 million umbrella in the construction requirements, you don't want 2 different insurance brokers or organizations reviewing those for you, because it's redundancy, first of all. Second of all, they might not match them up the right way because one organization isn't working with you on all those items. And to be honest with you, if you're talking to people that are looking for EIFS coverage, now look, I'll be honest with you. If you're a large wall conglomerate and you're spending $100,000 in excess, you're probably going to get a lot of people's attention. But the majority of the folks who are struggling with this challenge are contractors who are not spending that much. They're trying to spend less than, $50 or so $1,000 for their insurance a year. So you got a $15,000 minimum premium general liability policy. You might have an umbrella policy you have to purchase. You've also got your workers' comp, your automobile. All of these things are required for every job you go on to. What I'm telling you is you're going to get the attention of the specialized brokers out there by bringing them your insurance program and giving them a chance to work with you on the entire program. The folks that come to us and just ask us to provide them that liability policy are not getting the full depth or breadth of the services that you really need to get this thing done right, because it's more transactional, almost like a cafeteria plan model versus establishing a relationship with a broker who understands EIFS and understands construction. And that's what I suggest you do, because you're going to get the most attention that way, and you really do need that extra attention to get the best application and the best terms and conditions and pricing. I hope that makes a little more sense than the idea of bundling. Bundling's more of, hey, buy your home and auto insurance together and get 15% discount. That's not what we're talking about. We're talking about getting the attention of the right specialized brokers, and the ones that are really good at this across the country are ones that write only the insurance account. They walk away from the opportunity. Matter of fact, I've got a note here that I had pulled out that came to me via the EIMA website that shows a list of brokers, and a gentleman sent me one sentence that says, hey, this is my name, and I would like a minimum premium EIFS policy quote. I'm sorry, I mean, I understand that, and I corresponded with him because he came from EIMA. But here's the thing, you have no chance going about it that way. It's got to be much more further out. You need to do some things for yourself to select what broker you could be comfortable with from an expertise standpoint, personality fit, organizational, cultural fit. Ask your peers, ask other people, pick one. But you want to be committed, if you're really looking to satisfy this issue, you want to be committed to bringing them the entire insurance program to work with. Trying to split it up amongst your local agent and then somebody to specialize in the synthetic stucco piece of it is probably not the best model. I've not seen it work well, and I've seen most of the times those things get muddied up and something gets done wrong.
Okay, thank you, Joey. So are there any tips that you could give these folks about maneuvering through the application process?
Yes, be ready to show how long you've been doing something, how well you've been doing it. Be ready to brag about how good you are at what you do. And step back as a third party almost and look at yourself from the outside and say, what do we do from quality control? What do we do from safety? Some of these things you do so often that they're ingrained in your business, so you don't think to brag about it. But guess what? These folks want to hear about it. And they want to know the different things you're doing to make your workmanship better than the average contractor. Why are you doing negotiated work for certain GCs? Bob's going to show you here soon that recommendation letters from your general contractors who know your workmanship, all these types of things. That's what's going to make you what we refer to as a top of the stack submission. What I mean by that is your application and your information are so attractive to them that they're going to start working on that first because they really want to write your insurance. So that's the idea, is to open yourselves up a little bit more, brag about what you do from a safety and quality control, be prepared to pull out the contracts that you're involved in right now and the ones you see yourself going into in the future. Be prepared to provide some financials. I can tell you right now, if you show a very positive, long financial history, it's extremely confidential. It's only between us and them, and then we immediately get rid of it. It's not out there floating around in the cloud or anything like that, but you want these folks to know that you run your business very well. So being willing to offer up that information and go through that process only allows you more access and better terms and conditions and pricing. That would be my way of telling you.
I was going to say, contrary to popular belief, insurance companies do want to develop relationships and partnerships with their insureds. We don't like it when the business gets churned and people are just coming in for the low bid year after year. I need to beat this premium, or I need to have this or whatever. We want to be able to work with you from year to year, and if we get good information at the outset, that helps us to start that process so that we can, as Joey said, you rise to the top then, and we think, this is an account we'd like to write. This is an account we'd like to keep for a long time. And we'll be a lot more flexible with those if we can build those kind of relationships over time.
think it's also important to deal with a company that knows about our business, and obviously, these two firms know about the business. If you look at the checklist that Kathy showed you a few minutes ago, it outlines, show us what you do, and that's what Joey's saying here, that's what the underwriter wants to see too. They want to know that you know what you're doing, and if they have a comfort level of that, it's going to help the whole process and your costs too. So those are some things that we can deal with. So the last piece of the program is we're going to go through a case study, and Bob Dunn's going to lead us through that. And I asked Bob yesterday, I said, Bob, how are you? Where are you from? And he says, well, I'm from Omaha. He says, do you know where Omaha is? I said, sure, it's in Denver. I mean, Peyton Manning always said Omaha before he snapped the ball, didn't he? So anyway, so Bob, you want to take us through the case study? And I think from this, there'll be some questions that will be generated, and we can get the panel to respond. So Bob?
Sure. This is what started everything here. You can tell the construction deficit crisis produces coverage restricting endorsements. From that point on, EIFS became excluded from most insurance policies. Nobody wanted any part of it. Here's a typical example of a specimen example of a exclusion. It's a complete exclusion of EIFS coverage. Okay. I have a pretty good sized contractor, and most of you know Richard. He came to me, and I had written some insurance for him. We started at the very beginning. We started at National Indemnity, which is a Berkshire Hathaway company, with home office in Omaha. And they were just getting involved in this coverage. So we tried them for a while. And then we said there has to be something else out there and for a better premium. So we went to another operation. And by the time we went through 4 different people, we went through a managing general agent, who went through another managing general agent, who went through somebody else, who finally went to the company. Well, each of these companies, of course, wanted a little bit of premium, a little bit of money. So we gave up on that, and Richard came to me with an idea on that he had a pretty good sized contract, a mid-rise office building. And the project owner happened to be familiar with EIFS coverage. They were familiar with the insurance requirements, but the competitors were not. So the value of the contract was about $280,000. So I got a hold of, currently I was working with Amwins in Chicago, and they had us with Vela. And we were being charged kind of a composite rate. He does 3 different things. He does EIFS work, he does drywall, and he does painting. So we were getting a composite rate for all things combined. Well, we kind of got together and worked on the company, and they agreed to separate out the different trades, which provided a much better rate for the drywall and for the painting. Now, that helped, that helps the bottom line. When you're bidding these jobs, you're throwing in that extra amount for insurance, and it could make a difference between whether you get that job or not. So what we did here was we had Richard.
Another slide up.
Yeah, the one with the resume and all that.
You go back to the previous one.
Yeah. Okay, here's something that would get the company's eyes. Now, the companies have their own applications. And So an agent, a broker, gets, and I'm going to make a comment that I am, Joey is pretty much a hands-on expert, on this coverage. I am, on the other side, a broker that writes a lot of contractors, but I don't specialize in EIFS contractors, okay? So what I do for all the contractors and what I did for Richard in this particular case, just have him get together. Now, some of these questions are asked for by the carriers, some aren't. But a resume showing what you've done, where you've been, experience, if it's a fairly new business, what you did before that. If you worked for someone else, what positions you held. And if you're experienced, you put together a history of your larger jobs. Insurance companies like to see that you've completed large jobs. Put together some photos. So I went around town and took a bunch of pictures from the work that he had done, and actually some work that was in progress, showing his people, working hands-on. So from particular points of view, like was mentioned before, sent a copy of the subcontract agreement. I asked him if he had any general contractors he did work for that really liked his work. I said, don't use the ones that don't. We didn't have any that didn't like his work. So we put together 2 or 3 of those, and they were very generous in what they said about his company. Manufacturer warranties. All the manufacturers have a warranty. Company might require it. If they don't, throw it in there too. Let them know that that if something goes wrong with the product, that they won't be on the risk. They won't have any problems. Let's see. Memberships in organizations, very, very important. Well, because like the people on the panel are familiar with the work that memberships are trying to do. Then there's the EIFS Smart Construction. What's the last word? Designation. Okay. My glasses are good for about 13 feet, and that must be 14. So anyway, so that is a really single. How do you folks look at that? The smart contractor designation?
Well, absolutely.
Anything, yeah. Anything that enhances or shows that the person has gone above and beyond is very important.
Who is it that sponsors the EIFS Smart training?
It's AWCI.
Yeah, that's, from what I understand, you have to have 40% of your people enrolled in the program. I mean, there's tests, there's education involved. By the time it's over with, you should have at least 40% of your work staff knowledgeable in this field.
Better confidence.
Okay, all right, these are some of the things we went through. There's the warranty, the letter of confidence before. What else we got here? That's part of the warranty. There's a certificate of completion, okay, from an organization. Anything you can find to get together, that you can put into insurance companies don't fear paper. I mean, they ask for at least 6 pages of initial information, and then they ask for another 6 pages of additional information. And although sometimes the client, or my client, is a little reluctant to spend all that time, and say, oh, no, I don't want to do this again. As much true information that you can put on those makes everybody happy. If you can make the managing general agent happy, if you can make the company happy, that's the whole key. Then they'll be willing to do some things for you. Okay, now here, if you want to get the exclusion removed, some of the companies will remove the exclusion completely. Others will exclude EIFS, but they'll let it back in for certain things. Like if you do work with particular manufacturers or some other different reasons. So they'll have an exception to their exclusion. All right, what else we got, Dave? Yeah, this is just from Valley. I didn't have any on the James River. So, all right, what else we have? Yeah, that's the same thing again. Okay, here's some costs, and this is just on the general liability. This is a premium on the top with EIFS coverage. I'm going to do something here that I really hate to let everybody see that I'm doing. But, okay, so if you see, I just picked the general liability limit. You notice with the EIFS insurance, there's a $5,000 deductible. So if you go to a company and they have a composite rate, they take everything you do. They take your EIFS work, your stucco work, your drywall, your painting, everything they do, they put together a composite rate. In this particular example, rate's $12. If you do $3 million in sales, there's your premium, $36, $36,000. Now, if you get the company to do it by trade, you can see how they break it down. There's a different rate for each trade. Painting and drywall are, of course, much lower than the stucco EIFS work. Premium is $14,034. It's half the premium. So if your company is not doing that, then you might want to approach them and have your agent and see if you can't get them to price the insurance by trade. All right. Now, here's Mr. Joe Contractor. His policy excludes EIFS work. So he makes his bid on the project, and he gets a quote from his agent, and he gets the drywall, stucco, and painting. You notice the difference, or this is $400 because the normal, regular insurance carriers go by payroll rather than by sales. So I asked Richard to tell me how much payroll, or how much, what kind of payroll it would be to develop. That's not even what I said. I said, if you have $1 million worth of sales, what would you have in payroll? So he figured $400,000 for each trade. If you do $1 million, $1 million, $1 million, so $400,000. Look at the difference. That's $8,478 compared to $14,034, or compared to $36,000. So which would you rather be paying? These we got rid of, individual things. Let's see, go over here, let's go to the certificates. Yeah, continue. Yeah, there we go. here's an insurance certificate. This is from EIFS contractor with EIFS insurance, okay? Let's go to the next slide. Now, I can't tell if he switched slides or if that's the same one, because they're identical, okay? The only difference is the carriers. If the guy that doesn't carry them, EIFS insurance, is probably getting his insurance from, maybe they're using one company or maybe two. So this is what's presented to the general when they ask for the certificate. Of course, this is the description of operations will be filled in almost entirely by the verbiage that general contractors and the owners want. But the point I wanted to make was when the general gets the certificate, they just pigeonhole it, you know, and make sure that the signature's on there, make sure that the coverages are right, the policy's in force. That's it. They're on their way. So what is a good idea to do is, in my experience, I've had 3 carriers ask for something in the comments that would show that there's coverage, that they actually cover, there's no EIFS exclusion. So what I've gotten to the habit of doing is putting in the sentence, general liability coverage provides an exception to the standard EIFS exclusion. Or, if depending on the company, you could put in general liability coverage provides a waiver of the exclusion for EIFS work. So by the time we did all that, we were able to change carrier, not change carriers, we had the same, used the same carrier. We were able to change the way that they were rating, which saved a bunch of money. It made my customer happy, which is a good deal. Made his general happy on a plan. The important thing to remember for an insurance agent like myself, Joey, you don't go directly to the companies, or do you?
I do most of the time, yeah.
Okay, you go directly. I don't have that advantage. I have to go through a managing general agency. What those are, there's a few of them around, quite a few of them around. And what they do is they contract with the different carriers. And you go to them, and then they take that application and they spread it out to the different people that they have, that they're associated with. So from an agent, and it's important that your customer, the contractor, have an agent that's flexible, is able to get out and do some of these things. It's not restricted to just having a carrier with 1 or 2 companies that, you know, he shouldn't even be discussing this coverage with you. You should be calling Joey. So anyway, that's how that came about. Is that kind of what you had in mind, Dave? Yeah. So that's a little bit more of a personal aspect. Someone that does this all the time, and then someone that doesn't all the time, that has scattered customers. But we were able to get the job done. One, we had a good relationship with the MGA, the managing general agent, and they had a good relationship with the carrier. Very, very, very important. If you go to different MGAs, some of them are contracted with the same carriers. So what you're doing is overlapping. So the proper way, from a broker's point of view, is to have one that's familiar with each coverage and use them, and then let them go ahead and contact Vela and James River. So I think I have 1 minute left, and I'll
Okay.
forego that.
All right, thanks, Bob. I mean, what he outlined for you is take a real case situation where had a contractor had an issue, and he was able to work through and provide his customer with the type of coverage, but also looked out for some of the pitfalls that it could run into particular problems. So that's kind of wraps up our official format. So now we can open it up to the floor to any questions that may come out. So if anybody has questions they'd like to address, yes?
It's a very basic question. When you were in your case study, when you were showing the composite rate being higher than when you looked at the individual components of it, why is that? Why is the composite rate higher than when you break it out? And because none of the individual rates were the $12 per $1,000.
Yeah, well, the composite rate, the carrier is counting everything that you do. They're taking the highest rate.
Okay.
All right?
That actually isn't true.
That's not true. That's not true.
No, because when we do composite rates, usually you are bundling all the rates. You'll have, if you're doing various things, there's different rates for each tier, right? And the composite rate, some rates are going to be really low, some will be a little bit higher, and it actually squeezes it down. And sometimes for simplicity's sake, people want the composite rate just because it's easier.
Is that an average?
It's an average.
It's an average,
That's exactly right. It's an
And we,
average.
I know Vela uses, I personally, as an underwriter, use composite rates much more, just because some contractors have 8 different things they're doing in the payroll, and some of those different class codes or areas, like painting, they might only do 200,000 in payroll on that. Instead of taking each one of those classes, some of them I'll even bulk together if they have commonality, and then get 2 or 3 different rates and then average it out.
Do you get a payroll audit for that?
It's
At
audited
Vela, we tend to
receipts,
use receipts more than payroll
Right.
for contractors. We find that to be a more solid base as to what we're underwriting.
Yeah,
Right.
gross contracts. So what ends up happening is, no matter what your labor force is like, the gross contracts for that policy period are going to be the best indicator of how much exposure you've got for the insurance carrier for your work. So whether 100% of it was subbed, or whether none of it was subbed, or some combination, if you're the subcontractor and you're using second tier subcontractors, the composite rate makes it much more effective for pricing, and it makes it much easier for the customer for pricing and for audit purposes. Now, the downside of that is if you have a true conglomerate. Some people in here, some guys, folks I met last night, true 3 or 4 different trades where you've got a substantial amount of work in each one of them. That is the situation where you probably want to have that next step, like what Bob did with his client, and say, hey, we've got 3 different things we do that are drastically different. One of them has to do with the building envelope. The other has to do with just painting the inside of it. The other has to do with laying tile or whatever it may be. So we would like to make this more flexible for the customer and maybe more cost effective if you would use 3 different or 4 different, however many classifications. It's really an individual risk assessment, because if you only do 2 things and the majority of what you do is synthetic stucco and maybe you do a little bit of acoustical ceiling, that sort of thing, then a composite rate still makes sense. If you're doing 50-50, you probably want to have that conversation to say, hey, can we develop 2 rates here, because I've got a lot of work over here working on the inside, and then I've got this other work where I'm working on the building envelope that you really want to charge me for, so let's separate the 2. But gross receipts is the much better way for our mechanism to use versus payroll, because we're picking up all that, whether it's sub-labor or not.
And is it usually based on the preceding year, or is it?
What you're estimating going forward.
Yeah. So you'd use the preceding year as a tool, but you're obviously trying to give them the best estimate possible for the upcoming year.
You guys are talking about an individual contract right there. Typically, we get insurance for the entire year.
Yes, sir.
Right, so when you're, how would you break down a single contract?
You can do it the same way. You can take, and estimate what your payroll is going to be for a given year. You can estimate what your gross receipts are going to be for a given year. You can estimate what your sub-costs are going to be for a given year. And then you break it down you take those costs and break it down apply to the appropriate class codes or whatever. And that way, we can work something on our end to give you a premium for a whole year. What I want to emphasize too, that, composite rate versus breaking it down, it's really your preference, how you want your insurance policies presented to you, because it's your contract. It's the contract you're making with the insurance carrier to provide you coverage based on your operations. The industry in general has gotten a little bit lazy with the whole composite rate concept. It just makes everything simpler to present you a premium based on here's your rate times your gross receipts or your payrolls or something like that. So it's really your preference, and presenting that to your insurance broker. I want my payroll shown here. I want my receipts. I want my sub-costs.
And your insurance broker, like what Bob did for his customers so well, it really should be going through the exercise of looking at saying, hey, let's look at it all different ways and see what's the best fit for you. And then let me go and talk to the insurance carrier to try to get them to do it the way that we think's best. And then that's the negotiation part of it.
See,
And if you're at a minimum premium, obviously, no matter which
Yeah.
method you use here, your premium's going to be the same.
Yep.
See, earlier when I misspoke about the composite rate, I was just trying to draw out some conversation from these folks.
And you did.
Well done, well
And,
done.
yeah, and it happened.
When you guys mentioned earlier, like, for a minimum policy, it's just 15, 20.
Yeah, that'd be the minimum annual premium, and that's pretty
It's very
pretty standard.
and it's standard for a lot of classes of business. It isn't just limited to EIFS. I mean, insurance companies have certain basic costs that, to get a policy out the door. So you're going to run into minimums no matter what.
Saying minimum, exactly.
That's the least we're
The
going to
least.
charge, the least we can charge you for our costs to write your insurance for 1 year.
So
one
let's say,
policy
for
term.
instance,
It's not minimum coverage, it's minimum.
It's minimum premium.
Minimum
No, it's not
cost.
minimum
the minimum amount
coverage.
you're gonna pay for the
Right.
year, no matter what no matter what the payroll exposure or the receipts exposure is, you're gonna pay that cost. And then as it gets up over that cost, then you work with the insurance carrier and the broker to establish the rate, that sort of thing.
So that would change, could change during the year, you think?
It can, but some carriers most carriers are gonna be flexible. Some of them have an endorsement that actually addresses that. I mean, you don't want to get too technical here probably, but each carrier has a way to work with you if you're going to start to exceed that minimum premium because of growth. Growth's a good thing, okay? So if you're growing, the key is have a dialogue with the insurance broker so they can have a dialogue with the carrier well before your policy expires. Because once it expires, there's a rate on the page, and unless you have an endorsement to protect that, you can sometimes get caught up in an audit situation. So what you want to do is that minimum premium, if that's where you're at, you just want to work with the insurance broker and the insurance carrier to make sure you understand what rate is being used to get to that minimum premium. And then as you exceed the amount you had estimated and it starts to exceed the minimum premium of that rate, you want to work with the carrier. But that's just the minimum premium you would be charged for the year.
If you have a policy that's estimated at $3 million in gross sales, and you have 6 $500,000 contracts, you have no problem. It's gonna, it's gonna hit right on the dot. But that's not average. So you're gonna have a couple that go over a little bit, and so the insurance carrier will come back and say, well, you owe us another X amount of dollars, unless it happens to fall underneath that minimum premium. Your agent can tell you when you break that. How much sales or how much payroll it's going to take to break that minimum premium threshold.
Okay. You have a question about
So that was a question what I was going to mention is that on the composite rate, it actually you become lazy because like you said, it's easier. And what we found was that we actually internally tracked everything. And what we found is the underwriters like to know that we know that what we're doing. And if you just say, hey, here's $10 million in business, we do, all these different things, then it's like, the risk goes up, right? But when they know that we know what we're talking about, like, hey, we only do this much in East, we do this much of stuff, with this much of paint and that, I think if you address the underwriting portion of it, they realize that if you know what you're talking about, you know what you're doing, we've gotten a better rate because of that issue right there, that we can say, here's the jobs. The other part is when you go to composite rate and you are 1099ing, you're actually paying twice, because when you break it down, we have their certificate, we make sure that they have the insurance, then we're able to pass that on. But if we composite, you can't pass that on because you're now going on gross sales versus on payroll sales. So, I mean, there's pros and cons, but it takes a little bit more work as a contractor. But if you really want to save that money, you have to be knowledgeable of what you're doing, and you have to be able to communicate with your insurance agent and the underwriting, especially underwriting, that let them come in and make sure they know that you're hitting those checklists and doing those things. And so, again, a smaller company, maybe composite's the way to go. But for us, we've gone the other way, kind of like what you mentioned with your client, is that, it took a little bit more time, but it saved us money to really implement the programs and make sure that we're doing it.
That's correct. And if, like you said, if you have subcontractors, if you have risk transfer in place and you show that to us, we make accommodations for that in the rate. Again, the more detail you can give us about your company and all the precautions you're taking to mitigate losses, the better premium you're going to get from the company.
And to your point about the subcontractors, yeah, we do give you a break if you can demonstrate that you are carefully monitoring their insurance situation, so that you can avoid at audit the potential for being charged additional because your subs don't have insurance or they're underinsured.
I would add a caveat to this, just that one piece of it. When we're talking specifically about if you've got insurance coverage that includes your work for synthetic stucco, okay, that subcontract, just for that segment. Now, the other segments, it makes complete sense where if you've got an insured sub, the insurance carrier should recognize them as an insured sub and charge you much less for that. But if it's the synthetic stucco piece of it, because we run into this a lot with labor forces with our clients, it's very rare that sub has synthetic stucco insurance as well. So really, your rate and your receipt space for the synthetic stucco piece of it, from a general liability standpoint, there's really very little credit that probably should be expected back for the subcontractor, even if they have a general liability policy, because it's probably got a total EIFS exclusion to it. That's normally what you run into, but it's just for that segment. So when you're breaking it out like you're doing, all the other segments can benefit and aren't penalized by a composite rating. So whether you get a composite rate ends up being the answer or having 4 or 5 different rates, the main thing that you come away from this is have that discussion. Have that detailed data, because regardless of whether they decide to use a composite rate or split out rates, if they've got those details that you're talking about, then the composite rate's going to become more favorable, even if that's what they decide to use. So it's a win-win no matter what, to really be able to parse out your work and show the insurance carrier exactly how much you plan to have going on in each individual trade.
Other questions? Wayne?
I want to go back to that stucco versus EIFS thing, and it's really more related to property owners.
Okay.
I'm starting to see a disturbing trend that owners can't get insurance for EIFS, but they can for stucco. So we've actually been told, that's what I want on my building, but this is what they're making me put on, and that's stucco.
What is there a specific regional market you're working in?
Right now, I'm seeing it in New York City, so
Okay.
is that a New York City thing, or?
We have it in Texas too.
It's a coastal property thing more. The closer you get to the coast, the property insured, just like the marketplace that we're talking about up here, it's a smaller market. Well, the same thing holds true for as you get closer to any coast, period. It doesn't matter, Atlantic coast, the Gulf, Pacific, doesn't make a difference. There are going to be bigger concerns about wind shear, and there is a misconception out there. I'll just be flat out with you for property insurance. As you get closer to the coast, whether it be New York City, coast in Texas, coast in South Carolina, it doesn't make a difference. Some underwriting companies have it in their mind that synthetic stucco is just going to shear off like a piece of skin. All right, it's a misconception. It's wrong. So what you end up having to do is you got to go to the next underwriting company that has a better understanding. You got to go to the next one that is willing to look at the project itself, look at the photos, look at, hey, we've been here for 12 years in this building, in this cladding, and nothing has happened whatsoever having to do with wind shear or anything else. So it's just a little more effort. Most of the time, that answer is, lazy is the wrong word, but somebody hasn't gone far enough. Because there is no hard and fast rule out there that says, if it's a synthetic stucco building, you can't get insurance. The problem is a lot of the underwriting companies have a misconception that there's going to be a wind shear problem, so therefore they're much better off with a hard coat stucco building versus a synthetic stucco building. Well, it's our job to explain to them, you've got a tremendous amount of moisture issues and other things besides just the wind shear. But that's what it comes down
Is that
to.
relatively new? Because this seems to just kind of, it's just starting, and we're disturbingly getting more and more of these.
It's almost like a good way to compare. I don't have a good sock example, so I'm sorry, but it starts to fester. So, kind of the attitude you work with one insurance carrier, and then you turn around and maybe you go to work for another, and you can take that attitude with you. So there's a limited market for some of these properties that we're talking about, especially in the areas that you're discussing, New York City, some parts of Texas, the Carolinas, that kind of thing. And it's just, honestly, it's an underwriting company to underwriting company, and you got to get over, somebody's got to work on behalf of that owner to get over that misconception. I spoke with someone at the break who had the same question. I insure property on the coast of the Carolinas, Georgia. One underwriting company says, oh, that's synthetic stucco. We just go on to the next three and say, listen, this is a perfectly good building. Here's all the reasons why, if you don't want to open up and talk about it. But there is a misconception out there, and that is something that you can try to continue to do from an education standpoint, from the association level to property insurers. And as those things come up, I highly suggest, this is twice that both of you asked the question, get the names, or maybe if you can get names of insurance carriers or anything like that, and get that information to your association contact. They can come back to the pool of us that we keep an open dialogue about and try to help you there, because it shouldn't be hard and fast where they tell you, oh, the property insurance for a synthetic stucco building is not available. That's just wrong.
Especially on property insurance, with big properties, the coverage is usually layered. So one company will write the first $1 million, and someone will write 3X of 1, and then 5X of 4, something like that. And they each get a copy of each other's policy, and someone will say, oh, here's an exclusion or an endorsement or something that maybe you should be using. And next thing you know, everyone's using it. It's a bad idea, spreads quickly in the property world.
Sometimes what happens is there's been a loss. Somebody had a loss, and then it does get, localized. And then all of a sudden, oh, you can't do it there because, like Joe said, an endorsement will appear on a policy, and the next thing you know, a whole bunch of carriers that are writing business in that area will start using the same thing. We see a lot of weird things regionally just because either some kind of legislation has been passed or there's been losses in that area.
Other questions? Well, having seen no more hands in the air, I guess that we will take that as a note that we've told you all you need to know about insurance. And now you have a wealth of knowledge about it. When you go back home, you'll know what to deal with. So I would like to thank the panel here for joining us. So let's give them a round of applause. Thank you very much. So the plan is if you need some of this information, Dave can get it to you. They have filmed this, so it will be on YouTube sometime in the near future. So if you want to view it, this information will also be available on the EIMA website, I believe. So that is that. So Dave, you want to say anything else, or you may just tell them?
I just think it's fantastic. Thank you very much for all your knowledge and imparting it to us. Thank you.
Okay. Thank you for having us.
Thank you.
Thank you.
Yeah, Bob?
I just had one comment. I'm not a member of the organization, but I have a very good friend that is a customer that trusts me, and I really think a lot of him. Now, how I ended up here was he was to give a presentation. Something came up, and he couldn't make it. So he advised Dave by email with a copy to me that he couldn't make it, but his insurance agent would probably be able to make it. Well, I said yes, and I'm glad I did. Everybody I've met has been very, very, very nice to me, especially the folks at table 8. Yeah, that was, they were sharing food and having a good time.
Okay, great. Well, thanks, Bob, for filling in, and you did a great job. So I think we're done with this session. The next event is lunch at 11:30, which will be across a room next door. So, and then after that, those of you that are going to play golf, get your golf clothes on, and those that are going to chase alligators, put your alligator boots on. So anyway, thanks for your attendance. We'll see you later in the day.
I'm sorry, excuse me.